From that, let's shift focus now to our first guest. As promised, this guest is from the Oriental Bank of Commerce. Mr. S.C. Sinha, the Executive Director, joins us. Mr. Sinha, good afternoon and thank you very much for joining us. You've got approval for preferential equity allotment from the Government of India to issue 4.12 crore equity shares. When does the money actually hit?
Actually, the government has indicated that they will be raising our capital from the government holding from 51% to 58%.
Okay.
And that they are planning to inject before 31st of March 2011. That is what indication has come.
Okay.
But how much actual will come, only time will say.
Okay.
But we are expecting that government will give at least, they will raise their preferential capital to 58%.
Okay. So 1,740 crore comes in?
1,740 crore has been estimated on the basis of if the government holding goes up to 58%.
Okay.
But so far it has not been clearly indicated by the government that how much they are going to inject in this financial year and how much in next financial year. But the fact remains that within a period of say either in this financial year, say before 31st March, or let us by next financial year, some amount will come.
Okay.
But in any case, we will be getting some amount in this financial year. It may be total 58% or little less than 58%.
Okay. So if that money does come in, Mr. Sinha, what will be the material difference in the next quarter, in the April-June quarter? Would it definitely push up your margins anyways well above that 3.1% that you did in the previous quarter?
You see, our guidance is that we will maintain our margin 3+. And getting a capital at this juncture will definitely help us to grow substantially in the next financial year, because these funds, this capital, we are going to get it sometimes before 31st of March 2011. So whatever injection of capital will be there, that will be marked for the coming year's growth. And our guidance is that we would like to maintain Tier 1 minimum 9%, so that our capital adequacy doesn't fall below 12.5. So that is the guidance internally we have taken, and we would like to maintain that level. And NIM also we would like to maintain 3+.
Okay.
I think
any word on the credit growth? Since, as you point out, it's a capital constraint that would have prevented you from going all out to get deposits and loans, will to the FY12 mean a slightly higher pace of growth of deposits and, more importantly, loans?
You see, I have already told you that our Tier 1 was already +9. So it was never a concern for us for the credit growth. Because our capital adequacy, you must have seen, is more than 12%, 12.30, so more than that. So we are adequately capitalized. We are having sufficient headroom also to raise Tier 1 and Tier 2 also. So it was never a worry for us for expanding our credit. But having got the government approval for injection of capital, it will help us in faster credit growth in the next financial year. And we are looking for somewhere around 20 to 22% credit growth in the next financial year.
So, what perhaps on the rates, your deposit rates have already inched up to about 9% now, a 50 basis points hike recently. How do you think the trajectory is going to pan out from here on?
You see, liquidity in the market is really a challenge, it is a concern for all of us. But for the last 1 week I am observing the liquidity has started improving. Government spending has already started, because several government departments are getting funds for budgetary growth, budgetary commitment. So liquidity likely to improve in the coming week also, and the next financial year I am expecting rates which were hardening almost every week will come down. Now it has already reached to the peak. Now it will come down. That is my feeling is
so
that.
Where do you see them stabilizing?
Now it has stabilized. Now it will start coming down. It has already reached the peak. So now it will start coming down. It has started showing a sign. Since yesterday also you must have seen 10 years GSEC has come down. Even the call money rate has also come down. Even the CD market rate has also come down.
Has it come below 10?
Yesterday evening. No, it has reached to 10%. It was hovering around above 10.15. Even the 3-year CD, 3-month CD also.
Okay.
And yesterday at the end of the day it has come down to 10.
Okay. Sir, let me concentrate on another issue. Yeah, if we can now shift to your bad loan portfolio. Your gross NPAs increased in the last quarter when you reported numbers. It went up to 1.94%. March end you were at what, 1.6 I think. So, there has been a 60 basis point jump in the NPAs. What is the likely percentage, or will there be a further increase in gross NPAs by the year end? More importantly, where is it getting generated? Is it getting generated in the farm sector by any chance?
You see, NPA is a concern for all the banks, and NPA has to be there if the credit growth to take place, because some amount of casualty in all the sectors are there, and we are no exception. But our guidance is that we would like to maintain our gross NPA below 2% and net NPA below 1%. With that guidance we are going ahead, and the NPA, with the slippage which has taken place in the last quarter and in the second quarter also, it is a mix of sectors. It is not only this agri sector. Other than agri sector also some slippages are there. So it all depends on the market, how the supply side improves, how the production side improves. If the economy starts growing, I think all these sectors will start showing improvement. But one good thing with our bank is that whatever new NPA has come out, whether it was agri sector or other sector, assets are there, the clients are there, the business is also somehow is going on. So we expect all these loans which have gone bad, in next 1 year to 2 years time, some improvement will be there. We will start getting some recoveries. So our bottom line will improve.
Okay.
And we are still maintaining our guidance that below 2% gross NPA and net NPA below 1%.
So it will still help if you can tell us which sector is really a troublesome sector, or sectors are troublesome in terms of bad loan generation. And the other question is, what is your pension liability? How much, now that Reserve Bank has given you 5 years, what will be the quarterly provisioning?
See, our total pension liability is coming around 1,100 crore. This has to be appropriated in the next 5 years' time, and we have adequately provided for this financial year. Rather, we will be having surplus provision also, and so then that way we are very comfortable. Our balance sheet is very strong in that text. So there is no worry on the pension or in the gratuity dues.
Okay. All right, we leave it at that, Mr. Sinha. Thank you very much for joining us. The last point that Mr. Sinha made is important. They had provisioned 352 crore for the second pension. That was an ad hoc provision they made. Chances are that in the forthcoming quarters they will have to provide much less, probably more in the nature of 75 crore or something. So over-provided at least. If you took a pro-rata quarterly provisioning, this is because some employees who retired earlier and had not opted for pension got a chance to opt for pension. So all PSU banks have this problem of having to provide for that extra pension.